Hi everyone, it's Grace. Welcome back to my channel. So in the previous 3 videos, I talked about the tax benefits for individuals, corporates, and the energy sector. If you're interested in investing in residential real estate, I suggest watching the individual tax benefits video and this video, which is about tax exemptions. If you're interested in commercial real estate, I suggest watching the video about corporate tax benefits and the energy sector tax credit. Before we begin, remember to subscribe to my channel and click on the bell button so you'll get notified immediately when there are new videos uploaded. Remember, it is important to keep renewing your knowledge base. So today I will talk about the tax exemptions you can enjoy if you're investing in Florida real estate. Many home buyers are concerned about the amount of property taxes they need to pay and what type of tax exemptions they can enjoy when they're investing in Florida. To better understand, I will divide this video into 4 parts, including general tax exemptions, additional tax exemptions, save our homes, assessment limitation, and important dates. This video will be very helpful to you either you're a first-time home buyer or you're investing in Florida for the first time. As a preview, Florida has a lot of great benefits in tax exemptions for service members, veterans, retirees, and a disability. According to the Florida Department of Revenue, there are many tax exemptions you can take to lower the amount of property taxes you have to pay. If you or your dependents plan to become permanent residents of a Florida property, the first $25,000 is exempt from all property taxes. The second $25,000 is taxable. The third $25,000 is exempt from non-school taxes, and the remainder is taxable. So depending on the value of your property, you may be able to take up to $50,000 of tax exemptions. I will provide a link to the general tax exemptions in the description below. Number 2, additional exemptions. Other than general tax exemptions, there are also additional exemptions if you meet the following requirements. If you're a Florida resident and ex-service member honorably discharged and have at least 10% disability because of misfortune or wartime, you may deduct $5,000 from your property's assessed value. If you're a Florida resident and honorably discharged veteran with permanent disability, you may receive total exemption of your property. If you're 65 or older and a permanent Florida resident, and your household income does not surpass certain income limitations determined by the local ordinance, you may be eligible to take additional tax exemptions of up to $50,000. If you're widowed, you're eligible to take additional tax exemptions of $500. If you're legally blind, you're also eligible for additional tax exemptions of $500. Number 3. Save our homes assessment limitation. Florida has a special assessment limitation which limits the amount of property taxes that homeowners have to pay each year. It's called Save Our Homes SOH assessment limitation. I will provide a link to the overview of SOH in the description below. Now, property values always fluctuate according to the market, but another important indicator is the inflation rate, which is reflected by the Consumer Price Index, CPI. In part 1 and 2, I talked about the general and additional tax exemptions, and the calculation of the exemptions is as follows. First, the just value, aka the market value of a property, is determined. Second, the CPI is added to the just value, and this is where SOH comes into play. The assessed value of your property will be determined by adding either the CPI or 3%, whichever is less. This means that the assessed value of your property will always be capped to 3% to prevent the effect of inflation on your property if the inflation rate ever goes out of whack. And most of the time, the inflation rate will be well below 3%. Please note that SOH will apply only after the first year of owning your property. I will include the link in the description below so you can see the CPI up to 2021 and how it works. Third, the taxable value will be determined by reducing the eligible tax exemptions from the assessed value. Number 4, important dates. January 1st is the date when property appraisers determine the market value of your property. March 31st is the date when property taxes are due. Property taxes bills will be sent out in the previous year from October to November. Now, if you pay your property taxes early, you may enjoy a discount up to 4%. October the 1st is the date when local governments set a mileage or tax rate for the next fiscal year. Please note that in Florida, the local governments that determine and levy the property taxes are usually cities, counties, school boards, and special districts. Some of you may wonder what property taxes are used for. In Florida, about 50% goes to the public school systems, and about 30% goes to local government revenues. I will provide a link to the Flowchart infographic so you will have a general idea of how Florida property taxes are assessed, collected, adjusted, and used. So this is today's video about tax exemptions. I know there's a lot of information to take in, but what I want you to do is to focus all the content from part 1, 3, and 4 and only focus on the applicable items in part 2 because the rest won't make sense to you. I will provide all the links in the description below. So remember to save this video in your YouTube playlist or bookmark because you'll need it when you're planning to buy a property. I hope you find today's video useful. Please feel free to reach out if you have any questions to the business inquiry email. In the next video, I will provide an update to my YouTube video and social media. Stay tuned. Thank you very much for watching, and I'll see you on the next one.